Before you buy or sell even 1 ounce of silver today, you must watch this entire video because the real reason behind the crash is finally exposed. We now know why silver was driven down to $71, and the truth is far bigger than margin hikes or panic selling. This was not just Kevin Warsh, not just yen carry trades, and not just fear taking control of markets. President Trump signed a $12 billion order to buy the same metal you were forced to sell at the bottom. I have Reuters reports, Bloomberg confirmations, and New York Times verification laying out the timeline of this operation clearly. By the end of this investigation, you will understand how a $3 trillion wealth transfer was engineered in 72 hours. But before we expose Project Vault, I need to know who is here with us right now. The comment section today matters because this affects every investor, trader, and saver watching this unfold globally. Comment where you are watching from and what time it is there, so we show this community is global and alert. Pause the video, leave your location. Let's walk through the evidence step by step together. Pay close attention to the dates, times, and sequence of events, because timing is what proves coordination. Thursday, January 30th, 2026, silver hits an all-time high of $121.60. Gold peaks near $5,594 as euphoria spreads across retail and momentum traders. Financial media celebrates a precious metal supercycle while analysts raise year-end price targets aggressively. This moment marked the top, though almost nobody recognized it in real time. Friday, January 31st, 2026, the crash begins abruptly and violently. President Trump nominates Kevin Warsh as Federal Reserve Chairman, signaling a potential shift toward tighter monetary policy. Markets interpret this as the end of easy money and react instantly. Gold collapses 9% in one day, the worst decline since 1983. Silver crashes 27%, the largest single-day drop ever recorded. $3 trillion in market value evaporates as retail traders face margin calls and shock. Most believe the sell-off is finished and stabilization will follow. Saturday, February 1st, 2026, while markets are closed, the real trap is set. The CME announces massive margin hikes on gold and silver futures, effective Monday close. Silver margins jump from 11% to 15%, a 36% increase overnight. Traders holding 10 contracts suddenly need an additional $170,000 in cash. Banks are closed, capital is inaccessible, and liquidation becomes unavoidable. Sunday, February 2nd, Asian markets open into chaos as forced selling looms. Silver trades between 74 and 82, while gold plunges to 45.65. Panic accelerates as leveraged longs realize Monday will destroy them. Monday, February 2nd, 2026, marks the critical turning point. Silver collapses to $71, down 43% in 4 days. Gold briefly touches 45.65, holding barely above major support. Retail traders capitulate as momentum funds liquidate en masse. Then late Monday evening, President Trump unveils Project Vault from the Oval Office. A $12 billion strategic stockpile is announced for critical minerals procurement. Media headlines focus on gallium, cobalt, and rare earths for supply chain security. But buried deep in Reuters and Bloomberg reports lies the real revelation. Silver was added to the U.S. Geological Survey's 2025 critical minerals list. Silver is now officially designated a national security asset. The government is authorized to buy it at scale. This announcement came at the mathematically perfect moment to accumulate cheaply. Trump did not announce Project Vault at 121 silver. He did not announce it during the initial panic at 85 silver. He announced it after margin hikes, flushed leverage, and silver hit 71. If you wanted millions of ounces without driving price higher, the setup was flawless. Tuesday, February 3rd, 2026, the rebound begins violently. Gold surges 3% to $4,800 in a single session. Silver jumps 5% to $83 as sellers realize they were shaken out. Meanwhile, physical markets tell a very different story than futures prices. Shanghai physical silver premiums explode to $11 above spot. Normal premiums are $0 to $2, making this a structural dislocation. Chinese buyers offer $8 above spot for immediate delivery. Indian buyers pay $6 above spot without hesitation. Swiss refiners begin air shipping silver to Asia despite extreme transport costs. Air freight only happens when supply shortages become urgent. This proves physical silver demand never collapsed at all. Major bullion dealers report multi-week delivery delays and sold-out inventory. Futures markets show backwardation, signaling immediate scarcity. Paper prices collapse while physical prices surge quietly. This creates a two-tier market separating reality from futures manipulation. Industry analysts confirm this indicates mispricing of physical scarcity. Translation: the $71 bottom was artificial. Now ask yourself whether this sequence was coincidence or orchestration. While retail panicked, JP Morgan issued a bullish note at the bottom. They raised gold targets to $6,300 confidently. This same bank absorbed millions of ounces through delivery notices days earlier. Meanwhile, geopolitical risks reignite as Russia lowers its nuclear threshold. War trade demand returns instantly as peace narratives collapse. Gold and silver surge as safe haven demand floods back. Everyone who sold near the lows watches price race away. This was a cleansing of leverage, not a collapse of fundamentals. Weak hands sold, strong hands accumulated aggressively. Government procurement, institutional buying, and physical shortages converged perfectly. This pattern mirrors historical engineered flushes seen before major bull legs. The question is not whether insiders bought the dip. The real question is how much they accumulated while retail was forced out. Going forward, volatility will remain extreme and pullbacks are possible. But fundamentals remain intact across geopolitics, supply deficits, and industrial demand. Gold holding above 4,300 keeps the bullish structure alive. Silver reclaiming 100 would accelerate momentum dramatically. If those levels break, FOMO will return fast. Markets are not random when power and planning intersect. The timing of Project Vault was precision, not luck. Paper prices can be manipulated, but physical metal cannot be created. That asymmetry drives every major precious metal cycle. Comment below whether you believe this was coincidence or a coordinated heist. Share your price targets and your strategy with the community. Subscribe for investigations that connect dots mainstream media ignores. This is the Gray Ledger, and we will document every move ahead.